Hello traders, 14 minutes until oil news. S&P is excruciating pain, dancing at crucial Fibonacci support. Dancing in massive bearish correction. If this Fibonacci support is broken, S&P will collapse to lower levels, 2365.50, 2363. Knowledgeable trader understands extremely well. Institutions continue buying this market. Knowledgeable trader understands extremely well where crucial Fibonacci resistance and Fibonacci support is. If S&P will collapse all the way to here, market will become interesting and you will trade with institutions. Right now, oil at very similar levels. At crucial Fibonacci support. Last week, we had a bullish news, but oil was at crucial Fibonacci resistance. And remember that very important hot pink line on February 28th? This is where S&P is now, before oil news. If S&P is not gonna break through this level, is not gonna collapse lower, it will cause a major problem. We will continue dancing in very narrow range. This is exact same level oil respecting on weekly. This is where oil is now. Remember that? Remember why oil in so much pain? At crucial Fibonacci support and Fibonacci resistance for the last 4 or 5 months? If S&P will do this, it will be extremely disappointing. Lower S&P goes, more interesting market will become. Lower oil goes, more interesting market will become. If oil will finally break through this hot pink line, this is institutional support. Oil will collapse lower. This is a chart that's been present in front of you for years. Remember when oil staged powerful bullish rally in 2016, where graduates and students of the course been acquiring long-term position on oil from here? That would be so fantastic if oil will do that again. Until then, oil in massive correction on weekly. This crucial Fibonacci support was crucial Fibonacci resistance. Exact same level on S&P in front of you. If this level is respected, once again, bearish trend is minor. S&P will become so much more interesting if it would crush and burn through this level. If not, it's quite an issue if you're a day trader. Market is stuck in pain, in massive correction. So, here is oil. This is a chart that's been present in front of you since the start of January. Every single time oil gave us bearish news, I said my bias is bullish, and oil rallied for 300, 400 points. And every single time this hot pink level caused a major problem on oil. So, this time around, as you can see, oil at reversal zone. Very interesting place to be. This will be your crucial day trading support. This will be your crucial day trading resistance. These are your levels. No matter what the news is. You do not short near this level. You do not buy near this level. And if the price will crawl up to this level, this will be everything on oil. Bullish rally will pick up this steam, as this is crucial resistance, which was ultimate support last week. And here's S&P, massive bummer, not collapsing. reminding you institutions not shorting this market. We're stuck. Traders, here's oil expectation plus 1 ME. Oil news, unlike any other news, higher the number, more bearish the news, lower the number, more bullish the news. Oversupply is bearish, undersupply is bullish. And again, we're paying attention to this crucial Fibonacci support. You do not buy, you do not short near this level. This is a level we're expecting endless bullish pullbacks from. And I will bring up 1 minute chart, no matter what the news is. This is your crucial support. This is your crucial reversal zone. Cannot short near, no matter what the news is. This is your crucial resistance. First 5 minutes after oil news, allow oil to settle down. You will see very sharp spikes. Let's take a look what oil news is. Horrific bearish news, traders. Ouch! We have such an incredible oversupply of oil. 8.2 versus 1.5. Ouch! Why is oil rallying? Is that possible? Because this support is respected. It is the key right now. Anyone surprised if you're gonna see a selling pressure from this Fibonacci resistance? S&P remains stuck in pain at Fibonacci support. Here is oil rallying despite bearish news. Do you want to buy and sell on the news? Or do you want to play by the rules? As I warned you, institutions not selling S&P. As I warned you, S&P is stuck at this resistance and this support. No surprise whatsoever. Oil is rallying despite bearish news. Some of the most bearish news I remember on record. How is that possible? Anyone surprised? You want to buy on the news? Or you want to pay attention to Fibonacci? Bearish news did not mean a thing. This is institutional resistance. This is everything. Oil is taking pause at this level. And that's what price does every time. News does not mean a thing. Ever. Bearish news on oil. Are you buying and selling on the news? Do you understand what's happening on S&P? That institutions continue buying every single pullback, but you as a day trader can't? We're sitting at this resistance. And that's a problem. This is hot pink line that's always present. As I warned you before this bearish pullback. Market in pain. Are you surprised what's happening on oil? Did I tell you it will be crucial Fibonacci resistance? Are you surprised oil is taking a pause? Are you surprised stop is respected on S&P? No ifs or buts about it. That's how price moves, each and every time, to the tick. We would love for S&P to collapse as low as possible. We've been dealing with this excruciating markets second day in a row. We're sitting at crucial Fibonacci resistance. And this is the proper stop placement jack You placing random stops, it will never work. You understand where a hot pink line is? You understand what institutions do? All you have to do, play by the rules. Institutions buying every single pullback. But this is your ultimate day trading, retail trader resistance. No surprise where stop placement was placed. None. No surprise where a hot pink line is present. No surprise where bullish rally on oil despite bearish news, finding resistance. Boom! Do you want to use delayed indicators or do you want to play by the rules? Bearish news, bullish push on oil for 50 ticks, and here comes the reminder of this resistance. This will be a very fun place for knowledgeable day trader to be. If you know Fibonacci, you know market structure. That's what trading all about. As Fibonacci is the only predictive tool in the market. S&P in excruciating pain. Traders from beginner to hedge fund trader trading the method. What's appropriate for you is not what's appropriate for person next to you. Brand new testimonies coming in each and every day. Listen to students, listen what they trade, and play by the rules. S&P in pain. And that's what market does each and every day. We're stuck. How did we know that this would cause such a massive problem well before oil news? Level present in front of you for months, as I said to you. You cannot buy near this level. This is Fibonacci resistance. This is Fibonacci support. How did I know that this would be stop on S&P? How did I know this would be crucial resistance? This is your range. This is your resistance. This is your support. S&P will become only interesting if it will blast through this level. Until then, this is your range. We're stuck. Shock or not, exact same level where oil as a euro setting for the last 2 years. Exact same place, S&P. All the same formula. If you just remove the title from your chart, you would not see a difference. Every single instrument has the exact same formula. Every single price is the same. The only difference is instrument's liquidity determines instrument's volatility. S&P is stuck between this resistance and this support, and this is oil. Market in excruciating pain. Institutional rally on S&P 600 points later. That started at this Fibonacci reversal zone, reached crucial Fibonacci reversal zone on daily. That's the pain we're dealing with, traders. That's a torture. That's where it's coming from. As long as this support is respected, institutional bias remains bullish. US day trader in excruciating pain. However, favorite event of 2016 reminds you, if you play by the rules, you never shorted the market because Trump won the election. As we discussed with students days and weeks in advance, we did not care who will win the election. All we cared about is this Fibonacci reversal zone. And right now, this is what we're dealing with. Market 600 points later reached Fibonacci reversal zone on daily. However, I do not use word daily. I use 14 minute. If God forbid you're using word daily on your chart and you're a day trader, ouch, will not work. Knowing proper settings on your platform, knowing what to use, knowing what not to use is the key. Oil stuck in massive correction between exact same hot pink levels as S&P. All about 49. This level is out. Oil will collapse to here. Until then, we remain in massive correction. Exact same place that were crucial resistance before. No surprise whatsoever. And that's the core of a bootcamp. My favorite part of the website, brand new testimonies coming. 2 new testimonies from stock traders and day traders coming time and time again. Hedge fund manager will be sharing next week. What you trade, absolutely up to you. Please, reminder, all the information posted under Learn. We're down to 2 spaces in Fibonacci Trading Bootcamp. Trading room will be completely closed entire March. Bootcamp part of education course. Education course 8 weeks. Most students who walk through the bootcamp finish course in 2 weeks. What you trade is your choice. Private mentoring 16 weeks includes annual follow-up. All the classes live, each and every day in a bootcamp. In 1 day you get 1 week of education. This is regular schedule, bootcamp schedule Monday through Friday. Each and every day we're meeting. All the info under bootcamp. If you ever have any questions, never hesitate to contact me. All the information about contact us here. 925-257-4298. As once again S&P remains stuck just like oil. We are all falling asleep, we are all dying. But you're witnessing crucial Fibonacci resistance on oil. You're witnessing crucial respect of proper stop placement and Fibonacci support in front of you. If 2367 is out, market will become interesting. We need S&P to collapse to here. You as a day trader buying near this resistance, asking for serious trouble. This is your guiding light for your day trading entries. We're not seeing bullish rally we saw here on February 28th. None. We're stuck. This resistance causing the problem. Proper stop placement in your trading is everything. This is picture perfect example. Jack, where stop must be placed. In front of me, 5 trades. For the trading room, I brought up 1 on purpose to show you proper stop placement. This was expected. Market heading back down, traders. We just need this Fibonacci support to be broken. Only then, market will become interesting. And that's what you must respect every day. And that's what you trade. Hot pink support, where Apple rallied from despite horrific earnings. Hot pink support is where gold collapsed from last time around. Story like Carol is the reason I live and breathe what I do. Carol taking this picture in the place where I meet with students all the time, well before she took the course. She flew here from Dallas, took the picture, and then when she learned where we're meeting with students, she said, "How amazing! It's my favorite place on the planet." I said, "My goodness, Carol, I'm dying and dying to meet you." Carol and I had not met yet, but this is exactly the place where we meet all the time. No matter if it's with Michael, no matter if it's with Kathy, no matter if it's with William, no matter if it's in US or abroad. If students don't come to me, I come to my students. What you trade is your choice. And that's the reason I live and breathe what I do. Look forward to seeing you.